So, have you ever actually stopped to think what would happen if your expensive equipment, the stuff you rely on, gets stolen from a job site? You know what? The answer might actually shock you. And it all comes down to one of the most confusingly named policies in all of insurance: inland marine. And just to get this out of the way right now, no, it has pretty much nothing to do with boats.
Okay, if you remember just one single thing from this entire explainer, please let it be this. This sentence right here. It's the whole ballgame. It's the high-stakes problem that inland marine insurance was literally invented to solve. And for any business out there that takes valuable stuff off-site, ignoring this simple fact can be a mistake that costs you thousands. I mean, it could even sink your entire business.
So, what is this stuff really? Well, let's just boil it down. It's insurance for property that doesn't stay put. That's it. That's the secret. If it moves, if it travels, if it's used in a bunch of different locations, this is the policy that's built to protect it. It's for all the assets that are constantly on the go.
All right, let's just tackle the elephant in the room, shall we? That name. It's confusing, it's kind of weird, and yeah, it throws everybody for a loop. But I promise, in the next minute or so, we're going to crack this code so it makes perfect sense.
This is the question on everyone's mind, right? And the answer is actually just a quick little trip back in time. It all started pretty much where you'd expect, out on the ocean. So here's the deal. Back in the 1800s, marine insurance was super simple. It covered goods on ships crossing the ocean. But then, of course, the world changed. Railroads and then trucks started hauling all that same cargo inland, away from the water. So what did the insurers do? They just stretched their existing marine policies to cover this new part of the journey. And that's it. That's how the name inland marine got stuck. It's basically just a historical leftover for insurance on property that travels over land. So we've established the name as kind of just a historical accident. But what does this stuff actually cover? The easiest way to wrap your head around it is to break it all down into three simple buckets. Okay, let's dive into bucket number one. This is probably the one that most people think of first. This bucket is for all the valuable property that your business owns that goes with you from job site to job site. I'm talking about a contractor's expensive skid steer, a photographer's camera gear, or heck, even a consultant's laptop they use everywhere. This is the classic contractor's equipment floater, and it's all about protecting your own mobile assets wherever they happen to go. Now on to bucket number two. This one kind of flips the script. It's not about what you own, it's about what you're responsible for. Okay, so this is all about protecting your customer's property while it is in your care, custody, and control. Just think about it, a dry cleaner with racks and racks of customer clothing, or a jewelry shop repairing a super valuable ring. If something bad happens to that property on your watch, like a fire or a theft, this is the coverage that steps in to make it right. It's often called Bailee coverage. And that brings us to our third and final bucket. Now, this one is absolutely crucial, especially for contractors, and honestly, it's the one that gets misunderstood or completely overlooked the most. So this bucket, it covers your materials from the second they leave your shop all the way until they are fully and completely installed. I mean, picture this. A contractor has, say, 25 grand worth of custom cabinets sitting in a client's garage, waiting to be installed. If a fire breaks out overnight, who pays for that massive loss? That is exactly what an installation floater is for. It protects all that property during that super vulnerable in-between phase. Okay, so we have our three buckets. Now let's get down to brass tacks and see why this actually matters in the real world. We're going to look at three super common scenarios where a standard property policy just completely fails, leaving business owners holding the bag for huge uncovered losses. So imagine this. A contractor leaves a really valuable skid steer at a job site overnight, and boom, it gets stolen. Their standard property policy? It won't pay a single dime. And why not? Because that policy's coverage stops at the front door of the address listed on the policy, their shop, not the job site. It's a total loss. But with an inland marine policy, it's fully covered because the insurance literally follows the equipment. All right, let's take a plumber. Their work van gets broken into and thousands of dollars in tools are gone. A standard property policy might, if you're lucky, offer a tiny bit for off-premises property. We're talking maybe $2,500, but a lot of times it's zero. That is nowhere near enough to replace a professional's tool set. The inland marine policy, though, it was designed for this exact risk and would cover those tools right up to the full limit. And let's go back to those kitchen cabinets. They've been delivered, they're sitting there waiting for installation, and a fire destroys them. So who pays? Well, the homeowner's policy won't. They don't own them yet.
The contractor's general liability policy isn't going to cover it, and neither will their standard property policy. The only policy that covers this specific gap is the contractor's installation floater.
So it's pretty clear that inland marine fills some major gaps. But it also comes with some really special features that make it a uniquely powerful type of coverage for any property that moves.
I mean, this type of policy offers an incredible amount of protection. A lot of them are open perils, which is a fancy way of saying that unless something is specifically excluded, it's covered. Some policies even offer worldwide coverage. They can cover equipment you rent or borrow, and a lot of them include this fascinating feature called mysterious disappearance, for when something just vanishes from a job site with no clear sign of a theft. It's pretty cool.
But of course, it's not a maintenance plan, let's be real. Inland marine is not going to cover things like normal wear and tear, rust, or a machine that just breaks down on its own. It's really designed to protect you against sudden, accidental external events, not just the natural life cycle of your equipment.
We've covered a lot here. The weird name, the 3 buckets, the real-world gaps this thing fills, but I really want to bring it all back home to one simple final takeaway that just perfectly sums up the entire concept.
And you know what? That's really all there is to it. Just forget the confusing name for a second. Inland marine is simply smart, essential protection for the valuable assets your business depends on wherever they happen to be. So if your business owns things that move, just remember, this is the policy that's designed to move right along with them.